Yo, 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 yo. What up, everybody? Dude, big weeks, big weeks. Holy shit. Holy shit, holy shit. Hell yeah, baby. Everything looks amazing right now. Okay. We have a lot to talk about. I can't wait to get into all of it and try to explain things more thoroughly and more in the bigger picture and see how everything kind of is coming together all at once. There's just a lot of everything as to why we thought everything and to see how everything is playing out accordingly. There's a couple of things I've never mentioned before and a couple of things we'll hit on again of what we're seeing in everything that's going on, both technical, psychology, and other things. Okay, right off the bat, I want to talk about the SPY behaving in a way that ever since COVID's dropped, there was a very, very violent, weird coil that was going on where it went down and also the Fed lowered rates to zero. So there's this weird asynchronous wave in the market. As things go up, things go down. And you could see it all throughout, like the whole way down. You could see it all throughout the entirety of the entire rally. Where so like February of this year would end up having a reverberation into the following year. We end up getting a correction the exact days type of this, right? Going into here. And stuff like that. Like, so you're seeing weird reverberations at the same time frame and things like that of previous years, but not necessarily that they're both going to go up or both go down. I'm starting to see a lot of opposites. And so I decided to look at it last week. I was like, okay, let's see what, if we're looking at this year versus 2020, let's take a look at what it was doing. Okay. So I took off the bottom of March off the top here. Okay. Ready? Also, this is where UVIX ETF appeared, SVIX and UVIX, March 30th. And we always talk about how ETFs always show up right when they're supposed to, right? So as soon as this showed up, this turned super bullish. March 30th. March 30th. It was right at the top. So it always shows up perfectly. You'll notice the same thing with like SARK and now TARK. Right? So this is definitely something to keep in mind, and I think that this is going to rip as well. So you'll see all stuff like this. So anyway, it ends up coming out right here, March 29th. Where are we? March 30th. Okay, let's see. April 1st, huge gap down. We'll do it this way. March 30th, good gap up, right? Go sideways into about April 6th. It chops lower, but stabilizes until March 5th, April 5th, right here. What happened this day, April 5th? We'll do a 15-minute. It looks better. Can we get it? Does it go far back enough? No. We'll do the hourly, whatever. Right here. There was a very, very, very specific move, April 5th, where it violently spiked up in the morning. It was like super just perfect up and to the right, up until here. And then there was that gigantic candle that just cracked right there. I go, okay, that's definitely a cracking of the uptrend. And you have to stay bearish until it breaks back above the previous high here. And it never did. And then it went straight down. So let's look at that. Right here, April 5th, it tried going up and then failed, started the downtrend. April 6th, kicked back, went up, started the uptrend. Where did it go up to? April 17th, this went down. April 18th, it went up. April 21st, went down. April 21st, it goes up. April 29th, where are we? Right here, it goes down April 29th, and the next day is green. It overextended, but basically the same thing. So this goes up and this goes down right here. It goes up from May 2nd, May 4th, April 29th, May 4th. May 4th goes up to May 12th. May 4th goes down to May 12th. May 12th goes up to May 17th. May 12th goes down. May 14th, May 15th. It's the same thing. Let's see. May 15th goes up to about May, whatever. It goes up. And then May 17th, From here, it gets absolutely dunked. And you'll notice the thing, do you see how violent this move was? This is when we had the algos turned hugely bullish. You could see how it literally went parabolic because it got squeezed through. This trade didn't actually happen. It was a glitch trade intraday. It literally went from here to here in the blink of an eye. It had that long wick to fill this gap. And you can see how it kind of compresses down and it's like a rocket ship. It's like a slingshot, right? And so you end up getting that big move. It's the same exact thing as this. It's the opposite effect. How insane is that? So I started looking at this. I was like, okay, well, if that's the case, you're going to get a blow off move here soon, right? So where was this? This was May 20th. May 20th. So I was like, okay, so we're down here. This is going to keep going up. I was like, uh-oh, we're going to get wrecked here soon. We're going to go from June 2nd to June 10th. And we're not through with it yet. We're not done with this yet. And then we had the most violent bearish move. Like, this was an insanely bearish move. This is probably one of the most insanely bearish moves in an uptrend you'll ever see. It was like really insane from the way this moved like this. I think it broke. Personally, I think it broke the pattern here. We'll find out, but you'll see how it literally did the exact thing up and down the whole way down. So there's just something that was very interesting that I wanted to point out, and it's doing that due to the yearly, where it was going up and they got hit down really sharp. It came up, and it's just doing the opposite. It's like this upside down U effect. So what went down sharply down here to come back up is that we're doing the complete opposite, which is also another reason why I expect this to rally through all-time highs in the next 2 months, because this year should have some sort of neutral momentum to it. Huge down into a huge up into a neutral year. That's what it's playing out to be. So yeah, we'll see how it plays out and everything like that, but that's the thesis of one of the wave cycles for the yearly. So this was just interesting to kind of point out. Okay, S&P just clicked here. It's not working here. Whoops. That's fine. We won't do the time ahead. So you need to realize there's a glitch trade last night or on Friday right to here. We filled it just right here and it went right back up. Pretty easy, pretty standard. Okay, I want to talk about, this is not going to be a straight line, or I don't think it's going to be a straight line. I don't know how it plays out to the upside exactly, but if we get through the next 2 weeks, which is what we just saw with the whole June 10th into the drop right there, that's what's all happening this next 2 weeks. We have the Fed talking June 1st, we have the CPI in 2 weeks, and then we have the Fed in 2 weeks. And all of that, I don't know how it's going to play out. We have massive resistance here, which I think we either broke on Friday on that massive spike up on the last minute, where we're going to rip through at least and then maybe retest or whatever, or it's stabilized up and then we'll pull back a little bit, which I actually don't think we do. A lot of people are looking for this. I don't think we do. Is it possible? Yeah, it's possibly we retest that due to the weird VIX effect on this day. The VIX was behaving weird where it should have been down, but it wasn't, type of thing this day too. So could it? Yeah, it could, but you're looking to buy the dips, not sell the rips. The put buyers are going to double up their puts on the way up. The call buyers are going to be taking profit on the way up, and everyone's going to be trying to time a top to short it. Do you do that? Do you try to buy the dips in this type of environment? No. So if you're going up, you don't try to short the rips, short the pops. If something gaps up a lot, which like through some resistance, then yeah, you could probably go for a short. That's what I would expect. Something above this gaps up and then pulls back, gaps above this and then pulls back violently. The one thing that I want to see specifically, okay, I don't know the exact path, I don't care, but one thing I want to see very specifically this month, specifically the first 20 days, I want to see the market have a very, very violent drop. It should be the handoff between the bull trend and the bear trend of the flash crash coming in a couple of months, which I believe will happen in August. The importance of this is that if it's a bear trend and a flash crash, and this is what I see it as, there has to be a trade-off between the bull trend and the bear trend with some sort of volatility spike, and it should look and feel like this one of these days, right? It should look and feel like, holy shit, this is the bear trend coming back down. This was a bear market rally. We told you, ah ha 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 ha. That is exactly what it should feel like. All the bears will come out of hiding. That is the day where it should bounce. You look for the reversal candle, the reversal day off of that, and we are going to rip. Okay, that's what you're looking for. If we get that, then you know exactly what it is, because that's what I'm expecting, and that's what I'm expecting for the rally into the flash crash. Okay, very, very specific, very, very important. Okay, when you're looking at this stuff, like, I mean, anything can happen. There's so many different levels. This was the blow off bottom we wanted to see. We'll talk about that a bit. The weekly middle Bollinger is extremely important level here. It represents the MACD cross going on here. It's very difficult because we have to get up to the zero line. On the weekly, we need to get up to the zero line before the middle of July. This is going to take a lot of work. So to get above this, at this angle, there's going to be some sort of a kickback. Hopefully within the first two weeks here. That's what I'm looking for. Really want to see it. And it could be muted. What you'd want to see is a 1% gap up in the market and like a 2% drop. And then you close like flat on the day. That's what you're looking to see. That's what you're hoping to see. What do I want to say? Forgot. Okay. Next. Yeah, so it's not going to be a straight line. Buy the dips. You're not looking to sell the rips or buy, double down on your puts. It's not going to be a straight line. The triggers are the CPI in June, the Fed in the middle of the month, and everyone's talking about the end of the world because they're running off the balance sheet. And it's like the bears are going to make their bed. All right, UVXY, May 20th. This was the line in the sand. This was the line in the sand right here. If you could see how UVXY created a head and shoulders pattern, very, very weird and unique for that to have created like that in a correction type of environment. It's representative of a sine wave of something. Head and shoulders represents one sine wave, basically one impulse move. And this is where the UVIX ETF came out right here, and you can see it came out right here. You can follow it through and you can see how it's trying to activate. And so this is the uptrend in the market. It's trying to grip, and you can see it. 1, 2, 3, finally caught it. Lower lows the whole time. So it was kind of the market's trying to go higher, but then this clicked. And why did it click? Because this, in my opinion, started some sort of volatility event in the market. But by doing this, you create a very asynchronous wave cycle in the market. One's going up, the other one's going down. It is extremely advanced that I cannot explain. Like, there are so many different asynchronous waves of like a daily, of a weekly, of a yearly, that it's very hard to explain other than an abstractual thing in my head that I see, like one wave is going up and the other one's going down, but that a wave from like 6 months ago is doing this. Like, it's extremely difficult. But all you need to understand is this was one full wave and it's a head and shoulders pattern. Okay. We called for it like here. I was hoping it didn't happen. That's what it looked like it was doing. And that's exactly what it did. And right shoulders, whether it's an inverse head and shoulders or a regular head and shoulders, in any asset class, the right shoulder always is the most violent, is always the most convincing in terms of psychology, where now everyone is bearish. We made new lows this day, May 20th. How is UVXY not higher? And we explained in the last one how the peak down momentum in the market was in May, and how then the VIX newsfeed came out here and it was literally down and to the right, and how the eclipse came out right here. We'll talk about that and what that did. Came out right here, down and to the right. We finally broke this uptrend. Everyone is bearish now. Everyone is bearish. So why would we hit new lows and this isn't even breaking out? This literally retested the daily middle Bollinger on May 20th. May 20th, it retested it here and also retested here. But when you go below this, this is the line in the sand, the UVXY, above the 20 SMA on the daily and below it. You go above it 3 days. On the third day, if it's above it, you're in correction environment. And sometimes it does fake breakouts like this. See, this was like a stabilizer up, and then it fucked people, and then it went. But the fact that it did this is showing you that it's trying really hard to go bearish, and it failed hugely. and then failed again, and now you're looking at the downtrend. You're not going to go to here and then explode, because this was a very, very strong coil and wave pattern where it was exhaustive, trying to go up and fails. You don't do that, go down, and then this is exhaustive. It's perfect. Head and shoulders, everyone in the world is bearish. Everyone is buying puts on a rally that nobody likes, even the bulls. No one likes anything. Everyone is bearish, right? So this is very, very important. The biggest thing that we saw last week is how UVXY was going sideways the whole day, as the market ripped higher. Market up 2%, market up 2.5%, right? What the hell is UVXY doing? What is it doing? Because the wave patterns are not clean. What ends up happening is this didn't even quote unquote break down yet, and it did break down. It broke down exactly right here. This was the FOMC minutes right there, broke down. It didn't actually go down yet. The market didn't actually go up yet. And how do you know? Because daily DMI just crossed at the end of the day. 25.6 to 25 negative. Just crossed right at the end. The last print. Boop. And what did UVXY do the entire day? It literally went sideways the entire day until the last 30 seconds of the day. This is the first true bearish move that it made. Look, see how it's just kind of floating, and then boom, it's the market activating in a bull trend for the first time in this entire ordeal. From the bottom, it just activated to the upside. So what the hell is this? What the hell is this huge rally? It's the market not going down. That's what this is. It's the market stopped going down. This isn't even an up move yet. 8% off the bottom. It didn't even go up yet. And that's so accurate in what we think that this was a stabilizer. This was a blow off bear trap. The momentum stays up and it's not even going up yet. And we will see in the next 2 weeks the activation of the bull trend, and it should be huge. It should be extremely violent, and this should last at least 2 more waves to the upside, possibly 3, which would be the Fed meeting at the end of July. So you're looking for 2 more waves at least greater than that size. Not so much, actually not that in that size, in the strength of the move, which could be bigger in size, which usually is. So there's like so much momentum in the market that people don't realize. So I wanted to say, a possible inflection point in the first 2 weeks of June is the open price of May, 412.07. It's representative of a huge inflection point for basically 4 months in a row. And it's basically showing that this is going to go negative in June, and it's rejecting it. Because if it's going to go lower, you're going to get a big break right there. If it's going to go higher, you'd want to see a retest of the wave. There's a wave cycle here at 412.07. If you're going to break below it and go higher, you'd see the break and then the reversal, because it rejects the negative wave cycle. So that's one of the waves that you're looking for. 412.07. What it looks like on other indexes, it doesn't matter to me. You're kind of just looking at SPY, and wherever everything else is, that's where it is. The other levels they're all kind of the same. Okay, so that's that. UVXY, very important on this activation right at the end of the day. Boom, exploded. Boom, got wrecked. And also VXX, you notice how we talked about this for a while. This was a blow-off move that someone lost like $600 million on. We even did our own video on it as to how things happen exactly when they're supposed to happen. And look at that. Blow-off move, residual of this. This is a fake out. This should have been way higher when the market was lower, and it wasn't. Very, very, very clean. Very, very, very nice. And the failure. Okay, we want to look at now. People don't understand that eclipses move the market. Okay, I know it's weird to say, and I know it's weird to trade like that, but it works. Okay, if you haven't done it, if you've never seen it, if you think it's a big joke, it's actually not. Like, it's literally actually not. I'll show you. The last time we had a lunar eclipse was right here. Right here. Wow, look how bullish we look. Oh my God, we're just like totally unstoppable. We just go up and up and up and up and up, and then the eclipse. And then ever since then, down, 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 down. When did the next eclipse happen? Dun, 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 right here. Right here. So the reason why people have a difficulty correlating an eclipse or new moons or things like that to stock market movement or stocks or anything in general with the market is because it's not an exact science. It's not like, okay, that was an absolute bottom, that was an absolute top, so they end up forgetting. And people are stupid. Like the market participants are stupid. They forget things. They don't realize that it's in the momentum in the market. This down momentum, this blow off bear trap, this stays in the market. This doesn't disappear. This is implanted into the wave dynamic of the market. This is insane down momentum. Yes, this will rear its head in the future. Does it have to break this low? No. Will it? Probably. Eventually, for sure. But in the interim between now and next year, it doesn't have to, but I still think it does on the correction in August. But again, this does not go away. This is in the market. So, for example, you look at this, if that triggered it and we went to, if you actually look at the MACD and other indicators, you'll see how this was actually a top. Everything started topping right there. Everything started falling off a cliff right there too. This is just a blow off top, which is the Christmas rally. It's actually just violently spiking off of a hard down move. So that's why it broke it. Yeah. So now that happened there, down and to the right. Eclipse happened right here, and we watched it that night on stream, and we were free falling overnight. On the 1 minute, we'll show you. On the 1 minute, it literally just free fell straight down, and then the eclipse happened to the minute it started going back up. And so it was a very, very specific movement pattern. And if you look at this, you have the downtrend right here, right? So just tidy it up, make it a little bit tighter. You have the downtrend right there. It tried breaking it, but when you have a very violent down momentum like this and it doesn't fully put in the reversal pattern before the breakout, it ends up doing something like this, right? It still had downward momentum in it. It tried breaking it, and this is when the Fed spoke and actually rallied on what they said, and people ended up taking it negatively the next day or saying it was negative, which in fact it wasn't. It was just that this is how waves work. So when you have a violent downdraft and you have a violent move going into the downtrend, the third or fourth time, which this is the third, you end up getting a violent rejection. And if it holds, the probability that it's breaking this downtrend is extremely high. A true breakout, not just a fake one, where it wanted to break it here, and then it did this. This is an overextension to the downside. How much upside do you think there's in this? A lot. If it wanted to go up here and gets rejected this much and does whoop, how much more do you think it has to go? A lot. A lot. At the minimum. At the minimum. So anyone who's bearish thinking like 380 next week or middle of June, you're an idiot. Stop it. Stop it. It's not going to happen. Like, we'll literally look. The eclipse happened right here. Right here. 10, we even right here at the bottom. Falling off a cliff overnight. You're down 1% in like, what was this? An hour, just straight down. Eclipse happens here. It's like it gripped. It was trying to hold, it was trying to reverse the downtrend. And you could see it. Goes up higher. And you could see the weird, like, look at the movement. Look how weird that is. It's trying to go up and it's getting, look how fat these candles are. Trying to go up, weaning off the negative momentum. Trying to, like, look at the wicks. Trying to go up, trying and just trying so hard to go up. And this day, the UVXY was not behaving accordingly. It was a very weird move that was going on. UVXY didn't even go up on this drop. It went down 1%, and UVXY didn't even go up. It actually went lower. What the fuck, right? Doesn't make sense, but it does make sense because it's actually bullish consolidation of a very strong reversal. And then this bullshit happened. So it was kind of showing you that it's not actually going to hold this. And then we had the Fed talk and we actually got rejected, but then we broke through it. That is a break of the trend. When you see something like this, this is a break of the trend, but it doesn't look like a break. It actually looks like it failed. Hit the trend and it failed. No, it broke it for a future wave. That is how the stock market moves. It broke it for a future wave. And then this drop, we spoke about it when it happened. This is bullish consolidation on this drop. It looks insanely toxic. 4% down day, one of the worst days of the year, right? I think it was the worst day for the Dow, right? Bullish consolidation, tight, 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 tight. Look at the wicks. Look at all these candles. This is not what you would see in a bearish trend. You could see it, but not in this case. This is very specifically blow off bottom with bullish bias in it. And then you see all these violent spikes at the end. Okay, very, very important, very, very specific. And nobody realizes it. Why? Because the eclipse happened and we tanked 2 days later. How could that be the bottom? It was the trigger for the upside in the momentum. Down momentum triggers it, gets smashed into a brick wall, boom, get the fuck out, and then it bases and then goes. How do you know? May 19th, look at that day. It's red, actually closed red. Look at UVXY. We talked about this as to why we thought there would be a reversal on my last video. Where is it? 19 got crushed. Got crushed. Why would that happen if the market is red? It got crushed. Look at the movement intraday. Crushed. Get the fuck out. Get the fuck out. Crushed because the market is catching the weight of the market. It's catching the bull market, the bull move. It's catching it. It's like someone throws a cinder block at you and you catch it, but do you just hold it? As soon as it lands on you, does your hands not move down at all? No, you like sink down into it until you finally catch it and then you can stand upright, right? That's what this is. It crashes into it and it's holding, and UVXY represents the strength of the move in the SPY, the actual acceleration, basically. So it's catching it, UVXY gets crushed, and so lo and behold, it was the fucking bottom, right? And so we ended up making a video here saying we're looking for one more violent drop in the first half of this week, which literally happened exactly. This was a complete fucking disgusting move. It wanted to get the 20% print for the bear market just to get it. And that's sometimes what happens with the stock markets. They'll get that 20% print or 19.7 just to have people talk about bear market, really get it in people's psyche, and whoop, goes. It's an algorithmic trigger. We actually bought calls weeklies, like literally almost at the bottom, sold it a little bit higher, and then we bought July calls here, 387-ish, I think. So we're doing well with those. And then lo and behold, and then this happens right on the Fed day. And they said the same exact thing. It's just the fucking minutes of the last meeting, and whoop, we just go right through. And so you'll have everyone in the universe talking negatively, bearish, 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 bearish. We got the Fed coming. We got the balance sheet run off June 1st. I tell people that we're gonna have this huge rally. Like, what are you, an idiot? You got the Fed meeting in June 1st. You're so stupid. It's like, you're an idiot. You don't understand wave dynamics. You don't understand how the stock market and psychology and how everything plays in together. So the bears are literally shorting the rally. The bulls are taking profit and being extremely hedged. It's the most hated rally ever, and that's the reason for the rally. One of the reasons. I'm not going to say that's the reason. That's one of a major reasons for the rally. The wave dynamics is the end all be all. The psychology and everything else, and the eclipse is just fluff. It's just extra. It's like the Cool Whip and the, all that good stuff. Okay, getting through stuff. I have a lot to say, So we had the strength of the Friday close, also representative as the strength of the rally, okay? This entire week, I was explaining that we're looking for this blow off bottom, the drop, the doji, the kickback, and then the start of the uptrend. The strength of the move going into the close this week. It was talked about it for 2 weeks before it even happened. Every day we were saying that we want to see it. The strength of the move represents the strength of the rally coming, and we just fucking floored it. Just straight up Ferrari into the close. That is extremely strong. Okay, I still want to see one violent kickback, very violent. It looks very, very scary. Oh my god, it's a bear market type of bullshit in the next 2 weeks, and we want to see it hold. I don't know where it happens, how this plays out. You'd expect to see some sort of a kickback off the weekly middle Bollinger to get that MACD cross. It's just normal and healthy. There's that. And so then the psychology, I want to talk about how the bears feel very, very, very cozy. They're so happy right now, the bears. And I truly feel like people who are perma bears, people who are perma bears I feel like there's something wrong with their personality, in a sense that, or something with their personality or something in their life where they get power, they feel powerful because they have the confidence of something. Like they're not being heard in real life, or they don't have confidence, or they don't have authority over anyone. And perma bears love being perma bears because they would rather be right than make money. And I always say as my motto, would you rather be right or would you rather make money? Because it's true. Perma bears, or the bears in this rally coming, they don't care if we rally, and they will double down and they will short every single pop because of the inflation, because of the Fed, because of the balance sheet runoff, because of earnings suck, because of the last month and a half of volatility, because of every single fucking thing that you've heard in the economy, the recession, everything. They literally got duped. You got fucked. You got duped. Okay, they put the psychology in your head and you're fucked. Okay, you can't. They cannot and they will not reverse that mentality because it feels good, even if the market goes up. Yeah, this is how fucked it is. Even if the market goes up, they will still stay bearish because it feels good. They could go on social media, they could make fun of people, they could tell you a million laundry lists of things that's wrong with the economy and why the market's going to crash, and it feels good to say all that because you know you're right. And some of it is right. Some of it is right. We're going to have a recession next year, not this year. There's a lot to it that they are right in fractals, in partials type of thing. But as of right now, it feels like everything is right. It feels like all the bearish theses are right. Right. And you had the last month or so to have confirmation bias over it. So they just feel good about everything. They don't give a fuck what the bulls think, what they feel. We don't care. I am bearish and it feels good. And they get fucked. They'd rather be right than make money. And that's fine. Great. You'll be buying at all-time highs. You'll be buying everything so much higher. You'll be the one buying calls before we flash crash. And of course, once we rally again, we want to see that specific pattern that we talked about. The next 20 days, we want to see a very violent sell-off. I would say, I don't know, 4% top to bottom type of thing. It has to be very, very violent, very, oh shit, this was a bear market rally, and here we go, we're about to tank type of move. Wherever that is, I don't know. But wherever that is, 50 weekly, 20 weekly, whatever that is. I mean, this will probably be it, honestly, 440-ish. This is the biggest, fattest one. That would make a lot of sense, actually, off of the 50 weekly. So yeah, it's very interesting how everyone is behaving. We're right on the middle monthly Bollinger. It's really, really clean. It's the first time touching it since COVID. Like, there's just so many things that you see. Also, the VIX swell that we constantly talked about. There was the gap at 397, or I had an alarm at 397.5, and it did whoop, perfect right off of it. We filled the gap. There was a VIX swell right here, where the market went up and the VIX went up as well. And it usually means that it's going to revisit this somewhere in the future, and it did here. We thought it was the bottom, boom, blasted off of it. And then this is pricing in future volatility. This is pricing in not just this correction coming in August. I've never seen anything like this. This is pricing in years of volatility. Years of volatility. Doesn't mean that we're going to go straight down. I think we're going to have a megaphone pattern, higher highs and lower lows. I think it's going to be an absolute shitstorm the last couple of years. And you'll find out why it's also going to go up a shit ton because of this rally. You'll see, oh wow, that's a lot of energy in the market. So we'll see. So there's just like so many things. Like we see the DMIs, the wave mechanics, the psychology, the liquidity, the put to call ratio, the bearish sentiment that we've seen, like the worst ever. So many different indicators hitting, like the worst. Somebody said something on TV that said something like, what really scares me are the extremes where you get headlines of the worst week since like the Great Depression, the best week since the financial crisis, or the worst week since 1999 type of thing. And it's true. You don't want to see that, because when you see headlines like that, it's representative of fractals of past events where a shitstorm, that's at very high tops and very low lows. So when you see headlines like that, it doesn't mean the market's just is healthy. It means the market is insanely volatile, and you need to know what the fuck you're doing to be able to capture the moves. Or you could just sit in fucking Apple and buy 2 years in the money leaps and, work your Wendy's job. Do whatever you need to do. And last but not least, we want to talk about Well, first we want to say it's not a fucking bear market, okay? Straight off the back. It's not a fucking bear market. I'm so sick of hearing people say it's a fucking bear market. Bear markets look like this. You mutta. Bear markets look like this, okay? 2 years in, 3 years out. 3 years in, 5 years out. Okay? Bear markets. Do you want to consider these bear markets? Kind of, yeah. And I think we're in a massive megaphone pattern where it's going to do something like this again, but for like 3, 4, 5 years, and it's going to go up way high, way low on both sides. So when people say it's a bear market, it's not really a fucking bear market. It's literally opportunity both to the upside and downside for many years. If you don't know what the fuck you're doing, you're not going to be able to catch it. Okay? Simple as that. Stop saying it's a fucking bear market when you actually have no idea what you're saying. And we're not having a recession this year. Okay? 2021, they were crying for a correction the entire year. We never got it. We got it this year. Now they're crying hella for a recession. We're not going to get it. They were crying for the 10-year to go over 2%. Never got it. As soon as the year started, exploded, literally got 3%. Okay? What everyone keeps expecting in the year in mass, you don't get. Okay? When you get social media targets of psychology hitting levels, social media mentions of bear market and things like that, it ends up not happening. Or the bottom in the market ended up happening, at different levels. Like the last time it was this high was the COVID bottom that people mentioned bottomed in the market. Yeah, just so many things. So you have to say that, man. Holy crap. People need to stop saying bear market and saying this is a bear market rally. It's so fucking annoying. Like they don't know what they're saying. It's really aggravating. Like if you don't know, just don't say it. But they're probably talking their book and all that stuff. So it is what it is. Okay. Last but not least, the memes, GameStop, insanely bullish, insanely bullish. We bought GameStop here, 97. This was our mark up here. We made our video at GameStop 3.3 to July 250, saying that there may be one more violent drop and you'd want to look for the activator. Boom. And then motherfucking boom. That's the activator. So when I say something like an activator, that's the fucking activator. You're looking for an activator, right? 40% in a goddamn boing. So we got it, and we're off to the races. I expect GameStop. I expect GameStop and the memes and everything to rally with the market, right? Memes are not going to explode higher, and the market's going to just get wrecked, right? That's not going to happen. So people need to understand that dynamic. I see at least 384. This was a wave pattern up here. It's going to break this. It tried breaking at 250 all last year, failed. You're going to break it. You'd want to see some sort of a gap up above 200 to 250 to confirm it. Could gap up and then kind of retest back to 200 and then go. I don't know the exact pattern, but I'm looking for the break and I'm looking for at least above 340. 384, depending on the path it took to get there and what it's looking like, that I would be selling my July 250 calls, or all-time highs. Pre-market here was like 512, which was the high, which is also a possible inflection point. If it hits all-time highs, that is the sell to me. If it hits all-time highs, that is the sell to me. I do not see this going this year. I see this being a pre-move to the move next year, before the recession. I see this as the pre-move. You're looking at it just a violent click that's going to look and feel like this briefly somewhere in the next 2 months or so before the correction in August. Like, that's it. That's it. Like, I don't know how many times I have to talk about it, but we went through the whole wave pattern for months, and everything happened exactly when we expected it to. We literally called the bottom on the day. You're expecting a big rip. I thought the top would be like 160-ish. We blew through it, stabilized on the split announcement, stabilized up to 200 very violently. That was the stabilizer for the move to come. And then this is bullish consolidation, a crazy bullish consolidation. And it did exactly what we wanted to see, actually activated on the gap, and then you get that blow off bottom. This only happens in very volatile products, such as the meme stock. So this is why we expected some sort of, or this wasn't guaranteed, but we were expecting some sort of a violent bottom. You'll never get like a massive move in the memes like this. It's not gonna do that on like something that looks like this. You need to see something like, oh fuck, I need to sell GameStop. It will never be easy. People need to understand that it will never be easy to catch a bottom in the memes. You always look at the support and go lower. It will always do that in the memes. Always. Don't ever think it's going to be easy. It will never be easy. You always go to where it breaks support. Breaks support always. Forever and ever. Okay? Grand over 9 crossing the 20. It's going to reject that. Going into June. Oh my God. If this can go above 150 by today, May 31st, this is going to be the fattest candle in June. Oh my God. Oh my God. So, yeah, stay long. Enjoy the ride. So, right here on the MACD on the daily, between the bottom and getting to the zero line, there's usually a drop somewhere in here, in this area right here, where there's a violent kickback, because this area is very bad. It's like when you're reversing a trend and then you kind of retest the downtrend. It happens kind of like right around there, and there's usually a lot of volatility here. The way this bottomed, it doesn't have to happen, but it's a very common thing to happen. So it's just something you're looking for. Maybe the retest of the downtrend right here, which is the thing that we're looking for, right? Something that's supposed to feel like this. That's exactly it. This is the whole trend. It broke down. You'd want to get the retest of it and the failure, and then the negative DMI fails. Okay? That's what you're looking for. Everything is on deck. Everything is ready. It's gonna be insane. It really is gonna be absolutely insane. But people need to understand where things are gonna go and not get too crazy. Memes are not gonna make you fucking rich this year. And in fact, I expect it to come right back to 161 after the rally. Like, that's what I want to see. I want to see it go through all-time highs or 380. And then with a flash crash in August, come all the way back down. So this is where it gapped above this level here. This was the Robinhood insanity. Gapped above it right here. That's the line in the sand. This is an algo line. You want to see it broke above it. It gapped above it on the split announcement. So that was a stabilizer, and now this is going to break it. And when it crashes, you're going to crash into what was resistance, which is now support. And then that, I expect this to end up basing somewhere around here, going to the next like 6 months or so after August. And then you're going to start the final wave higher, which will end up breaking through all-time highs, somewhere between like 500 and 1,000 type of thing. Like, that's the pattern that I see. That's the pattern that I want to see play out. So, I mean, you can just hold it. If you want to hold it from here to fucking 400 and then have it come back to 160, yeah, be my guest. I don't care. But yeah, that's what you're looking for. All right, GG's. This was long. I had a lot to say. There's a lot of things you have to say on this rally. Things that people don't understand, and sentiment that people need to fucking get over. This is not where you stay bearish. It's just fucking not. Period. Even the bears are saying you have a quote-unquote bear market rally, whatever you want to call it. But the bearish bear is bullish and the bullish bull is bullish. They're just not extraordinarily bullish. They're still scared little bitches, not understanding what's about to happen in the next 2 months. Okay? Enjoy. Have fun. Stay long. Stay strong. Buy the dips. Don't sell the rips. Don't short and thinking that you're going to start crashing. Okay? Enjoy. Peace.